Hello students, welcome to Accounting Explained at Accountwise Academy. This is Latha Venkateshwaran. In this session, we will master real exam numericals on contribution and PV ratio step by step like you will see in your actual exams. Before we get started, please watch my previous video for a clear understanding of the concepts. That way, you will be ready to solve these questions confidently and can score full marks. Come on students, let's begin. Let us quickly go over the essential formulas you will need for solving contribution and P by V ratio numericals. Please do not be intimidated by the list because most of the questions use only one or two of these formulas at a time. Okay, now let us see. Contribution is equal to sales minus variable cost. This is the amount left to cover fixed cost and profit. In other words, you can write contribution is equal to fixed cost plus profit also. Okay, contribution, another way of finding is sales into P by V ratio. Here we are going to calculate contribution when sales and P by V ratio are given. P by V ratio standard formula is contribution divided by sales into 100. So this is calculated as a percentage of sales. Profit. Sales into P by V ratio first you find out and deduct that amount from fixed cost, you get the profit. Profit alternative way of finding is contribution minus fixed cost. P by V ratio from fixed cost and profit. So when fixed cost and profit are given, first you add fixed cost and profit. Okay, that amount divided by sales into 100 will give you P by V ratio. P by V ratio using change method. When there are two different periods of sales and two different periods of profit are given, then we find P by V ratio with the formula of change in profit divided by change in sales into 100. Change in profit means difference between 2 years profit and difference between 2 years sales you take. Okay, used to analyze profit change between sales levels. Next, required sales. If you want to find out the sales amount, if the target profit is given, then you can use the formula of fixed cost plus target profit. You first add that, the whole thing divided by P by V ratio decimal. Suppose if the P by V ratio is 40%, how will you write it as decimal? You will write it as 0.4. So like this, you have to take for this formula. This is used to find out the sales when there is a target profit. Okay. Remember, you won't need to use all these formulas at once. We will take them step by step for each numerical problem. Feel free to pause this slide anytime for a quick refresh. Students, are you ready? We are going to solve some exam numericals confidently. Let us see how an income statement under marginal costing will be presented. Particulars, rupees are the columns. Sales, first you will take in the amount column, less variable cost, amount column. When you deduct variable cost from sales, you get the contribution. Okay, underline. Less fixed cost. When you deduct fixed cost from contribution, you get the profit, that is earnings before interest and taxes. This is how an income statement under marginal costing will be presented. This is the exam question which we are going to solve now. Bright Future Limited reported a total sales of rupees 1 lakh during a period. The company earned a net profit of rupees 10,000 with fixed overheads of rupees 15,000 for the same duration. What is the P by V ratio for Bright Future Limited? What sales are required for the company to achieve a target profit of rupees 15,000? If sales rise to rupees 1,50,000, what will be the new net profit? Let me explain the steps what we are going to use for solving this numerical. Initially, we are going to find out the P by V ratio for the Bright Future Limited with the informations given. Okay, net profit and fixed overheads. That is the fixed cost. Next, with that P by V ratio as the base, we are going to find out the sales required for the target profit of 15,000. Again, with the same P by V ratio which we have calculated, we are going to find out the new net profit if the sales has increased to rupees 1,50,000. Come on students, let's solve the question. First part of the question is to calculate P by V ratio. Here, fixed cost is given as 15,000, profit is given as 10,000 and sales is given as 1 lakh. If fixed expenses, profit and sales are given from the list of formulas that we have seen before, the formula to be used for finding P by V ratio is fixed cost plus profit, the whole thing divided by sales into 100. Here fixed cost is 15,000, profit is 10,000, add it. Divided by sales is 1 lakh, the into 100. Okay, which comes to 25,000 divided by 1 lakh into 100. On simplification, we get P by V ratio as 25%. Now, the second part of the question is to find out the required sales for a target profit of 15,000. So now we are going to scrap off this net profit 10,000. Instead of that, we are going to take 15,000. That is the target profit. For the target profit, what is the amount of sales required? Okay. What are the informations available with us now? Let us see. Fixed cost is 15,000 same. Profit is 15,000 because that is the target profit they have given in the question. P by V ratio, just now we have calculated as 25%. With this information, we have to find out the required sales. So we are going to use the same formula which we used before for the first point. P by V ratio is equal to fixed cost plus profit divided by sales into 100. P by V ratio is 25%. Take 25%. Fixed expenses is 15,000. Target profit is 15,000 divided by sales into 100. Sales you take it to the left side S and 25 you bring it down to the denominator. So 30,000 divided by 25 into 100. On simplification we get sales is equal to 1,20,000. This is the required sales with the target profit of 15,000 and with the P by V ratio of 25%. We are going to find out the net profit when the sales is given as 1,50,000. Okay, we don't need this previous sales now and the net profit which is given in the question also. The information which we have now is fixed expenses 15,000 as given in the question. Sales, new sales is 1,50,000. P by V ratio which we have calculated is 25% and we are going to find out the profit with the given information. So with the given information we can use only the formula which we have previously used. So P by V ratio is equal to fixed cost plus profit divided by sales into 100. What is P by V ratio now? 25%. 25 is equal to 15,000 as a fixed cost plus P divided by the new sales is 1,50,000 into 100. In the numerator, two zeros can be struck off with the two zeros in the denominator, and we can take the remaining 1,500 to the left side. So division when taken to the left side will become multiplication. 25 into 1,500 is equal to remaining is 15,000 plus P. 25 into 1,500 is 37,500 is equal to 15,000 plus P. So 15,000 when taken to the left side it becomes minus 37,500 minus 15,000 is equal to P. Profit is equal to 22,500. So this is one of the exam questions which we have solved now. Students, this question is a classic and is very commonly asked not just for inter CA, CMA and CS executive but also in BCom and MCom exams. So I want all of you to really pay close attention to the step-by-step solution which we are going to do now. The question is as follows. DB Limited provided the following data. They have given the three columns, particulars 20, 20, 21, 21, 22. So this will take it as first year and 21, 22 will take as the second year. Sales is rupees 10 per unit. First year it is 2 lakh, second year it is 2,50,000. Profit is 30,000 and 50,000 respectively. Fixed cost for the company is rupees 50,000. You are required to compute the following. P by V ratio for the company, total variable cost for 2020-21 and 2021-22, profit or loss when sales are rupees 1 lakh. In 22-23, if variable cost rises to rupees 7 per unit and fixed cost to rupees 55,000, selling price remains rupees 10 per unit. What should be the sales amount to maintain the profit of 21-22? That is rupees 50,000. Before we start, make sure you are thorough with the list of formulas we discussed in the previous slide. These formulas are the building blocks for marginal costing, and honestly, you need to memorize them well. Come on, let's do the solution now. The first part of the question is to find out the P by V ratio for the company. Here, they have given 2 years of sales and profit. If they have given 2 years of sales and profit, then the P by V ratio formula to be used is change in profit divided by change in sales into 100. Let us see how to find out the change in profit. Year 2 profit minus year 1 profit. 50,000 minus 30,000, it is 20,000. Similarly, change in sales is year 2 sales minus year 1 sales. 2,50,000 minus 2 lakhs, it is 50,000. Apply this in the formula. So change in profit is 20,000 divided by change in sales is 50,000 into 100. P by V ratio is 40%. Here we know the formula, so we just filled in the numbers and we solved the question. So we will not waste any time for solving the question if we know the formula by heart. That's all. The second part of the question is to find out the total variable cost for the 2 years, okay? 2020, 21 and 2021 and 22. Here we have the information about sales for 2 years and profit for 2 years in the question. Now we have found out P by V ratio for the company as 40%. With this limited information, we will see how to find out the variable cost. Okay, the step is first to find out the contribution. Contribution formula is sales into P by V ratio. So sales is given, multiply with this P by V ratio, you get the contribution. Next, you can find out the variable cost by deducting contribution from the sales. Contribution which we have just calculated. So let us do for year 1, sales is 2 lakhs. Okay, P by V ratio is 40%. 40% of 2 lakhs is 80,000. So that is your contribution. Deduct the contribution of 80,000 from the sales of 2 lakhs. You get lakh and 20,000 as your variable cost for the first year. For the second year, similarly, your sales is 2 lakh 50,000. So take 2 lakh 50,000. P by V ratio is the same 40% for the second year also. So 40% of 2 lakh 50,000 is 1 lakh. That is your contribution. Deduct the contribution of 1 lakh from 2 lakh 50,000, that is the sales for the second year. You get lakh and 50,000 as the variable cost for the second year. Okay, so the variable cost for the first 2 years or the 2 years is 1 lakh 20,000 and 1 lakh 50,000 for the company. At this point, I want to ask you, if you like my video so far, please subscribe to my channel so that it will encourage me to make more videos like this in the future. Thank you. In the part C of the question, they have asked us to find out whether the company will earn profit or incur loss when the sales is rupees 1 lakh. Okay, for that we have to first find out the contribution. Contribution formula is sales into P by V ratio. P by V ratio we know it is 40%. We calculated in the part A. So 40% of 1 lakh. So they wanted to know for the sales of 1 lakh, right? So sales we will take it as 1 lakh. Contribution will come to 40,000. Next, profit or loss formula we have to apply here. So profit formula when contribution and fixed cost of the company is given as contribution minus fixed cost. Okay, so that is the formula which we are going to use now. You know contribution is 40,000 and fixed cost is given in the question as 50,000 minus 50,000. You get a result of minus 10,000. That means you have a loss. Okay, so the result answer is loss when sales are rupees 1 lakh is rupees 10,000. We are going to do the part D of the question now, which is an important part of the question because these type of questions will be asked in your exam quite too often. Okay, in 2022-23, if variable cost rises to rupees 7 per unit, they are making the variable cost as rupees 7 per unit and fixed cost to rupees 55,000. Previously fixed cost was 50,000. Now they are increasing to 55,000. Selling price remains rupees 10 per unit, but they are maintaining the selling price per unit as same rupees 10. What should be the sales amount to maintain the profit of 21-22? That is rupees 50,000. So the target profit they want to have rupees 50,000 with all the changes incorporated. Okay, let's see how to solve this question. So first we have to find out the contribution per unit. Contribution per unit is selling price per unit minus variable cost per unit. Selling price per unit is 10 minus variable cost is rupees 7 per unit minus 7 is 3. 3 per unit is a contribution per unit. P by V ratio is contribution divided by selling price into 100. So contribution per unit is 3 divided by 10 is a selling price per unit into 100 is 30% or in decimal it is 0.3. Now we are going to find out the required sales. Required sales formula is fixed cost plus target profit divided by P by V ratio decimal. So fixed cost is how much? In the question they have given the fixed cost as 55,000 and the target profit they need it as 50,000 because they need the profit same as 21-22 plus 50,000 and the P by V ratio decimal we calculated as 0.3 divided by 0.3 which is 1,05,000 divided by 0.3. On simplification we get rupees 3,50,000 as the required sales. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.